On September 18, 2025, the Federal Reserve announced a 0.25% reduction in the benchmark federal funds rate, marking its first rate cut since early 2024. This decision is part of the Fed's strategy to stimulate economic growth in response to slower than expected domestic recovery and global economic challenges. The federal funds rate influences borrowing costs throughout the economy, and this rate cut aims to encourage consumer spending and business investment by making borrowing more affordable. The U.S. economy faces several hurdles, including a slowing manufacturing sector and global economic uncertainties, particularly in China and Europe. The Fed's move is intended to counteract these headwinds and support the U.S. economy by providing additional liquidity. Implications for consumers and investors. For consumers, the rate cut is expected to lower mortgage rates, car loan rates, and credit card interest rates, offering some relief to borrowers. This could stimulate the housing market by making borrowing more affordable. However, savers may see a decrease in interest rates on savings accounts and CDs. For investors, the rate cut could boost equity markets as lower rates make stocks more attractive compared to bonds, potentially increasing corporate profits. Bond prices may also rise due to the lower yields. However, some investors may view the rate cut with caution, seeing it as a sign of the Fed's concerns about the economy, potentially leading to short-term market volatility. Future outlook. The Fed remains data-dependent, meaning future rate changes will be based on economic indicators such as inflation and the labor market. Fed Chair Jerome Powell emphasized that the rate cut is part of a broader strategy to ensure sustainable economic growth. While some analysts expect further rate cuts, others believe this adjustment may be sufficient for now. In conclusion, the Fed's 0.25% rate cut reflects its commitment to supporting the economy amid ongoing challenges. While the cut may offer some relief to borrowers and investors, the economic outlook remains uncertain, and the Fed will continue to monitor key indicators as it makes future decisions. For direct financing consultations or mortgage options for you, visit Nadlan Capital Group.